So in this video, I'm going to compare my returns over the past year to the S&P 500, my strategy for beating the S&P 500, and if it's actually working right now. So right now, the S&P 500 is up 20.61% over the past year, and this is as of the 12th of August, 2025. And I am actually up 34.94% or so over the past year in my portfolio, as you can see on Robinhood. So the way I've been able to beat the S&P 500 with this portfolio strategy over the past year by about 14% is through a lot of different factors. This has actually gotten better over time. Actually, it's improved throughout this year. So I anticipate that I will be able to keep this up and maybe even widen the gap going into the future. Obviously, economic conditions can affect that as well. Sometimes if you go into a recession, everybody's losing money and there's not much you can do. But we will adapt to those changing times if that happens. But right now, one of the things I like to look at here is what type of industry am I looking to invest in? And then I start looking at individual companies. So things that I think could happen in the future. I have a list of just a few off the top of my head on this spreadsheet here. This isn't every single thing that I want to invest in, but it is at least a few of them. So a few things that I think could change in the future, like autonomous ride sharing. We're talking robo-taxis that are self-driving. I think this could really change transportation and eventually make it where people don't need to own their own vehicle anymore. This can have a major effect on the economy, on tire shops, on auto body shops, on insurance, on car manufacturing, a lot of things. Uber, Lyft, all of that. So a few companies that are publicly traded that deal with this. Google owns Waymo. Uber, of course, is partnered with Waymo, and Uber has kind of the main source of ride-sharing users. Also, Lyft has a lot of users as well. Tesla is trying to become one of the top robo-taxi companies out there. And then Amazon apparently is dabbling in this kind of in secret. And then you have a few other things. I think nuclear energy is going to grow more and more. Energy is going to be very important because of the grid having to be beefed up with the rise of EVs, which are electric vehicles, as well as the rise in these super server buildings with everything they need to power AI. AI uses a lot of electricity, and it's going to require the US to really beef up the grid. And you'll see certain companies like Constellation Energy, for instance, pouncing on these opportunities and making that work. You have obviously AI chips, you have AI server OEMs. So, you think about not even who's making the chips, who's got the AI LLMs, which basically is the chat assistants, like what Google has with Gemini or OpenAI has with ChatGPT. But who is actually building the infrastructure for AI is also important as well. You look at companies like Dell, HPE, Supermicro, Cisco, IBM. You have others like Vertiv, which do AI infrastructure gear. Cybersecurity, I think, will be very important, not only now, but into the future. You look at companies like CrowdStrike and Cloudflare, as well as others. That's just a few. There are many other things that we need to look at in the future, but I'll get to that probably in another video. Another thing I like to do is see what kind of long-term news we have for individual companies in the areas I'm looking to invest in. So if you look at the news, there is one on here that's actually, I think it is a typo. It talks about Meta having a nuclear deal with Constellation. I think they meant Microsoft, because right here in the description, Microsoft will purchase electricity from the plant in a 20-year agreement. Either way, Microsoft is one of the biggest players in AI because of their investments, their early investments in OpenAI. When OpenAI really started to just start getting subscribers for ChatGPT, Microsoft pounced on the opportunity and became a major player by associating themselves with OpenAI. They have revenue sharing and all sorts of stuff in that deal, which I covered in a previous video. But Microsoft is one that made a huge deal for energy with Constellation. Another big energy deal with Constellation was with the US government. It's a $1 billion electricity deal. This one's 10 years. The one with Microsoft is 20 years. So these are two big long-term deals that were announced in like 2024 and 2025 with Constellation Energy, which not only did I want to invest in an electric stock, an energy stock like this, Constellation checked a lot of boxes for me, and they had these two major long-term deals of 10 plus years each, with one being the US government, the other being one of the biggest tech companies in the world. So sometimes finding news like that can be a really big driver for stock growth in the future. It's one of the things I like to look for here. That's one way I discovered Constellation. I bought Constellation and they're up about 25 to 30% since I bought into them last year. It's been a great stock for me. Now, of course, I'm going to just kind of give a few indicators that you may have seen me talk about in analysis videos, but some things that can help you kind of figure out whether or not this might be a buy or sell. And I'm not going to get into all the specific things I look for necessarily. I'm not going to talk about how much weight I give each individual factor, but just some things to kind of keep in mind about my strategy to see if you think you agree with it or not, or if you want to track my progress over time or not. So we're looking at Microsoft. PE ratio is one thing we like to track here. Pretty much everybody uses a PE ratio. Whether they give it a lot of weight or not is kind of up in the air depending on who you ask. Some people think PE ratios are an old way of doing things. Some people live and die by PE ratios with their investing. I'm somewhere in between. I think PE ratios are useful, but I think there are other things that can help you determine if a stock you like is at a good price or not, which is essentially what the PE ratio is helping you determine. Is the stock, it's not just about whether it's a good company, it's about whether it's at a good price for you to buy into it, or maybe for you to even sell later on. Now, also dividends. I don't actually focus a lot on dividends with what I do, so I focus mostly on growth stocks. I believe growth beats dividends most of the time, and if you need to sell a little bit to pay for something, you can, and take profits that way. Now, also, you can make the argument that when you get older, you might want to convert some of these growth stocks to dividend stocks because they're more steady, and you can just take the dividends as an automatic income that is consistent, that you can rely on in retirement. But right now, I'm not worried about that. Also, some other things, of course, earnings calls. We like to look at earnings calls here. One of the things I like to talk about when I do an analysis video, as you've probably seen in my last few analysis videos, a lot of companies just had their Q2 earnings calls. For instance, Microsoft beat on EPS and revenue. Usually that's a great indicator. One thing this does not tell you, though, that you might want to look out for is whether or not the guidance is in the positive direction. Now, you can actually use Robinhood to find that if you just want to see like a graph that makes it easy to read, but you sometimes have to wait a little while after the earnings call. So for instance, I looked up I tried to find an example that showed you what this looks like. If you go to Robinhood and you look up a stock, assuming they have all of this already calculated in their earnings graph here, you can look at, okay, well, did they hit or miss for Q2 2025, which is the most recent quarter we just had earnings calls for. And then you can see their guidance for Q3, the next quarter, is a good indicator on whether or not the stock will keep going up or not. A lot of investors focus mainly on earnings calls. And not only did they beat estimates for this last quarter, are they going to have positive guidance as a company? Does the company believe that they have a bright future for the next quarter on earnings? So this one, like for Tesla, you can see that they raised it a little bit for Q3. They didn't raise it by much. Some companies might have a huge difference, but that's at least somewhat of a positive. Although Tesla has a lot of problems with their other stock indicators, if you're mainly someone who goes based off of EPS, earnings, and guidance, there are some things, at least with guidance, that may be a positive trend that they think they'll at least make a little bit more in the next quarter. So just goes to show you that when you look at earnings calls and you look at some of this data on Google Finance, it doesn't show you everything you really need to know, but it does give you a good place to start. Now, some other things you might look at here, of course, if you look at, say, the balance sheet, I like to look at like assets versus liabilities. I'd say a 2-to-1 ratio of assets to liabilities or better is usually something I like to see. It's not the end all be all. A lot of these factors are just one of many factors, and maybe not meeting my particular criteria on one or two factors doesn't mean I won't necessarily buy that stock. But that's something I like to look at there. You can look at price to book. The thing about price to book is it's kind of relative. So it can be relative to industry averages. Like this is Microsoft. They're a tech company. A lot of times price to book is higher for tech companies, and that's okay. But if you look at, say, return on assets usually 5 to 10% is decent. Above that is pretty strong. So they have like strong return on assets here. Return on capital, if you look at that, 8 to 15% is usually pretty good, and they're above that as well. So those are some things that might help you feel like they're a safer or stronger stock. Of course, Microsoft has also been around a long time. Now you can also look at PE ratios. Sometimes PE ratios look a little different, especially right after maybe like an earnings call. Like there was a time, I believe it was Microsoft or another one, where they had a super high PE ratio on Google Finance. So sometimes this one is different. If you look at their PE ratio, it's 38.79 on Google Finance, and it is a 38.25 on Robinhood. So they're pretty much in line right now. But from what I understand, Google Finance uses more of a trailing PE ratio, and Robinhood uses more of a forward PE ratio. So it's good to check both just to kind of compare the two. And those can help you figure out if you do know you like the stock and the other indicators, it can help you figure out if it's a good price, if you're actually thinking about buying and you don't own it yet. As you may know, some other indicators I like to look at for whether it's at a good price or not is the EV to EBITDA ratio, which stands for the enterprise value versus the earnings before interest, taxes, depreciation, and amortization. I had to learn the hard way, actually, that there are some companies that will have a better PE ratio on paper than they really deserve. For instance, there was a company recently, I believe it was Uber, I believe, that had some sort of accounting or tax things that they used, some loopholes to make it look like their earnings were actually higher than they really were. They're higher than their raw earnings actually were. So this is more of a raw number if you look at this ratio and compare it to, say, the PE ratio. Sometimes this ratio will be a lot higher than the PE ratio, and that's because they don't have all these accounting and tax tricks and things like that they can use to balloon their earnings for the past quarter. So Microsoft, for instance, has a 23.98. You wouldn't really be concerned about that. It's even lower than their PE ratio. But if you look at some other companies, sometimes it's good to compare the two instead of just relying on PE ratios. So you have multiple PE ratios. You have the EV to EBITDA ratio. You also have something called a PEG ratio, which actually it's kind of like the PE ratio, except it uses growth instead of just earnings. So it's kind of earnings growth over time. So it can be the forecast 12-month forward PEG ratio. I like to use NASDAQ to find this. It's just very easy to find, easy to read, and it's easy to digest. So this one, they have a 2.28 PEG ratio. If you look at what a good or bad PEG ratio is on here, you're looking at pretty low numbers most of the time. So if you look at, say, if you're looking at under 1, it's pretty much undervalued, which means it could be a bargain right now. If you look at around 1 or 2, that's typically considered fair, and pretty well over a 2 or so, you're talking about maybe overinflated, maybe overvalued, and there could be a correction coming. But again, all of these are just small indicators, and you have to decide as an investor how much weight to give all of these different factors. Now, another thing I like to look at that I don't really see a lot of other investors talk about is whether or not you actually believe in the leadership of a company and whether you think they can actually execute a game plan, even if the company is built on a solid business model. Let's say you have a business that could very well disrupt an entire industry. Like you're talking about ride sharing, for instance. Well, do you believe that the company that's doing that particular business that could have amazing potential, do they actually have decent enough leadership that could execute that? Or is some other company with better leadership going to come and take that idea and do it better? So I like to look at how employees rate their company from being people who are actually in that company, instead of being like, well, Warren Buffett or this analyst or whoever said, well, they like some of the speeches from the CEO and they think they're a well-run organization. It's like, well, you can also look at the people who actually work for that person, who are there in the office behind closed doors, and see what they actually say about the company they work at. I think that's a really good indicator in my opinion. Obviously, everybody has their own methods. But for instance, if you look at NVIDIA, best places to work here, nominated countless times over the past few decades. And if you look at their overall score from people who have actually worked here, a 4.6 out of 5-star rating is an exceptional score. 93% of people who have worked at NVIDIA recommend working here to a friend. Another exceptional score. You hardly ever see that. 98% of people who have worked at NVIDIA approve of the CEO. Another amazing score. One of the best I've ever seen, actually, for CEO approval. So not only have they become the market leader in a dominant industry that's going to really make or break the future of pretty much every country when you're talking about the rise of AI and being kind of the next industrial revolution and how much change it could cause. Well, you're talking about one of the best companies in terms of taking advantage of one of the biggest trends, but also you're talking about what seems to be all indicators that they have great leadership. And then, of course, one other thing you have to look at is diversity. So right now I have an accumulation of a bunch of different stocks. This is obviously going to keep changing over time, but right now I am pretty heavy on information technology. So I am looking for opportunities to balance that out more and more over time. It actually used to be even more heavily into information technology with companies like NVIDIA and Microsoft, as well as AMD. I just think they're going to be some of the top performers in AI, and they have been already. AMD is starting to really turn around in terms of their stock going up, although they had kind of a rough year. Microsoft is well positioned. They've been around a long time. They're stable, but they're also taking advantage of what's going to be the future. And we all know how well NVIDIA has done. Now, communication services, I have 18% diversity here, which is Google and Meta, which have been two great stocks for me. Meta especially has been one of my best performing stocks over the past year or two. American Express, JP Morgan Chase are leading my financials as far as 12% of the portfolio. I mean, financial stocks are great. They're kind of a good balancer for if you're heavy into tech. You also have industrials, another one that's a great to help you kind of balance the portfolio, not be just all in on tech-related stocks. I look at industrial stocks that I believe will be part of the infrastructure for AI without having to just be all in on like NVIDIA and AMD and chip companies. So you have GE and Vertiv have been great there as well. Two of my newer buys, but I think will do very well long term. GE's already paid off really well since I bought. Constellation Energy, as I mentioned, one of my top utility stocks, the only utility stock I have right now, doing really well. Up, I believe, over 30% in the past year or so for me. It's right in that area, like 25 to 30%. And two great long-term 10 to 20-year deals to go with that. And the grid is going to be extremely important with the rise of not only EVs and having to build all these server buildings for AI, but also you have Bitcoin mining and things like that if you want to add into more of a stress on the grid. And then consumer discretionary, 6.68%. We have companies like Amazon and Uber. So we're talking about two of the top companies in terms of just products and services that everybody uses. So this will change over time, but it's been doing really well for me over the past year. And some of these are actually pretty new, so I haven't really had the chance to really see how much of a return these would get over time. But when you're able to beat the S&P 500 by about 14 or 15% over the past year, and your process is getting better and better every month, I feel like things are looking really good. Again, we'll see how things go in terms of whether or not we go into a recession or not, how we'll adjust from there. But this is kind of how I think about stocks, how the portfolio strategy goes. If you're interested in this and you want to follow the channel, don't forget to subscribe so that you can follow how I analyze individual stocks. And I do plan on adding a lot more interesting indicators in the future to help you make more informed decisions. None of this, of course, is financial advice. Make sure to do your own research. Everybody's situation is different, and I can't tell you exactly what to do in your specific scenario.